Tyler, nuclear remains a very hot topic for investors who are looking to profit from the reemergence of nuclear as a viable source of energy in a world that needs more power, wants to shift away from the emissions of fossil fuels, but facing the realities that wind and solar can't provide everything because of the amount of storage that it would require. Because of the amount of storage that it would require, let's talk about a couple of stocks in the nuclear space that we think investors should. Let's talk about some stocks we think can be big winners for investors who are looking to profit from the nuclear reemergence.
Yeah, I think we're going to talk about a couple that maybe not a lot of people think about when they think about nuclear, but this is one of those kind of industries where you really have to dig to find the real opportunities.
Yeah, the opportunities might be where the opportunities are often like this in places that don't seem like they're obvious. But what you'll find, there are companies that have been really big winners for other reasons over the long term. I'm Jason Hall. This is Investing Unscripted. This video is sponsored by The Motley Fool. We've got a couple great stock ideas for you. But if you're looking for even more great stock ideas, go to our special link. It's fool.com/unscripted. Go check out fool.com/unscripted, and you can get access to The Motley Fool's 10 best stocks to buy right now. Okay, Tyler, how about you kick it off? And I'll tease everybody. The one I'm going to talk about is a massive name that you've heard me talk about, but you're probably going to be a little surprised that I'm going to be talking to you about nuclear for this particular one. This is kind of in their wheelhouse, but not a lot of people know about it.
Yeah, so the company I want to talk about doesn't normally come up in the conversation of nuclear because it's actually a defense contractor. And that's why people might get a little tripped up by this. The company's called Curtiss-Wright. They are a relatively diversified defense contractor. They don't make, they're not like one of the prime defense contractors that has one of the big weapons platforms. They're kind of a subcontractor, right? They'll do components, they'll do things like anything kind of to support the mission. But more importantly, Curtiss-Wright has a significant investment in basically nuclear reactor equipment, both on the civilian and military side. Every reactor, civilian or military, in the United States today has Curtiss-Wright equipment in it, whether it be the nuclear subs or the aircraft carriers or just your commercial facilities. They make the things like control rod actuators, the things that actually move control rods up and down to manage the reactivity of the reactor, or the lead line doors and things like that. A lot of the specialized components that, somebody who's designing a new reactor is just going to order these things off the shelf rather than building and trying to design brand new ones every single time. One of the reasons that I think that this business, in my opinion, is going to do materially better than a lot of the other names that are thrown about when we talk about the growth of nuclear, is that they have this combination of profitability and growth today and profitability and growth tomorrow. If you look at a lot of like these new startup companies in the nuclear space, typically around the concept of small modular reactors, these are things that aren't even approved yet. And the first ones may be installed in the early 2030s on the most optimistic timeline. So you're looking at waiting 5 years for a company to first generate revenue, right? What Curtiss-Wright has is basically anybody who is doing maintenance or needs a facility upgrade, or, for instance, Constellation Energy just did that recent announcement with Microsoft that they're going to recommission one of the plants at 3 Mile Island. When you're doing a recommissioning, that's going to be significant growth for Curtiss-Wright, or significant orders, at least in this regard. Curtiss-Wright expects over the next 10 years that revenue for its commercial power business is going to grow significantly. I don't have the exact number in front of me right now, but the last time I checked, I thought it was close to like tripling its revenue between now and 2035. And that's not just United States reactors, right? They are a global supplier of reactors. So when you're seeing new construction of reactors in China who are using the Westinghouse design, which is kind of one of the most popular designs for reactors out there today, most Westinghouse AP1000 designed reactors use Curtiss-Wright equipment. Most of the European facilities use Curtiss-Wright equipment in some way or another. So this is a global opportunity to kind of catch on to international growth of nuclear facilities, not just here in the United States, where we're still trying to figure out exactly what we want to do to grow nuclear, as well as kind of those long-tailed ideas of small modular reactors. Curtiss-Wright has signed memorandums of understandings with just about every small modular reactor competitor out there, not just one or two of them. So it doesn't really matter who wins when it comes to the kind of standard bearer design for small modular reactors, it's going to have Curtiss-Wright equipment in it. And that's I think if there's one company that's going to benefit the most from the growth of nuclear over the next 10 years, it's probably Curtiss-Wright.
As investors, often we want to be early in the next massive thing, buying Amazon in the 90s, buying Apple or Microsoft back in the 80s. But the reality is, like you said, a lot of these companies that are touting SMRs and their pure play SMR businesses, there's no clear line of sight for these companies to get to actually generating revenue. And that creates a massive amount of risk for investors just to get to the time where that's going to happen. So companies that are built to make money now is a much better way to think about investing in this space in particular right now. Reduce that downside risk and you can still profit. I'm going to shift and talk about Brookfield Asset Management. So I've talked about Brookfield Renewable and Brookfield Infrastructure a lot as companies that I own for the reasons that I own them and the tailwinds for those businesses. And the reason I think Brookfield Asset Management is really compelling here is because its exposure to nuclear is so demonstrative of its overall strength in alternative asset management. Westinghouse Electric was acquired by Brookfield Business Partners out of bankruptcy a number of years ago. But back in 2022, when it had right-sized the business and gotten it to stability and cash flow generative, it moved on as the private equity kind of fixed the broken business existence that it is, and it sold it to really three entities. And the three entities that it sold it to were Cameco, which anybody, if you're following the nuclear industry, you better know who Cameco is, one of the largest producers of uranium in the world. Cameco owns 49% of Westinghouse, but Brookfield entities own the other 51%. So Brookfield Renewable owns about 17% of Westinghouse. The other 34% held in the Brookfield Global Transition Fund, which guess what? That's Brookfield Asset Management, which is one of the largest alternative asset managers in the world, has about $1 trillion in assets. Over the past 2 decades, we've seen a massive amount of growth in the alternative asset management space, from a $2 trillion global market to approaching $30 trillion as we're in 2025. Now it makes up a much larger portion of the global asset mix. And if we look forward, the expectation is that that is going to continue. By 2032, the expectation is it's going to go from 15% of the global mix to 20%, and it's going to double plus some to $60 trillion. So there's a tremendous amount of growth expected to continue. And how does this come back to nuclear? We continue to see dollars flow into investments in nuclear, direct ownership of some of these assets. In the case of Westinghouse, being partly held in funds that are managed by Brookfield Asset Management. This is a business that has proven its ability to grow and is one of the most recognized names in alternative asset management. We think about energy transition, the electrification of everything, infrastructure assets, real estate, all these things on a global basis. Brookfield Asset Management is one of the biggest winners over the past couple of decades in helping high net wealth investors get exposure to those assets. And I think investors who are looking to profit from the future of nuclear and all of the other things related to the energy transition would do really well to think about adding Brookfield Asset Management to their portfolios.